Are you longing to buy a home but fearful of paying a high interest rate for your mortgage? Or are you thinking of selling your home but you're afraid that you won't find a buyer because of higher interest rates? Well, there's no need to let fear hold you back. In this video, I'll show you how seller-paid rate buydowns are beneficial for both buyers and sellers. I'll also detail when you should use this strategy if you're a buyer or a seller so that you can get moving into your dream home. After all, the Dallas-Fort Worth market isn't crashing, and the longer you wait, the more you'll likely have to pay for a home in the long run because home prices continue to rise. So it's no secret that mortgage interest rates have increased drastically since the beginning of 2022. They basically doubled over the course of last year, peaking around 7%, and now they're kind of bouncing around every week between 6 and 7%. The pace at which rates increased really slowed down the housing market in the fall and winter of 2022, which was the Fed's intention all along to help cool inflation. It took a minute, but lenders adapted by offering a new loan product or feature to help buyers get lower interest rates for the first couple of years of their mortgage. It's called a seller-paid rate buydown. You may have heard them referred to as a 3-2-1 buydown or a 2-1 buydown. So what does that jargon mean? Well, it means that the seller makes a contribution toward the buyer's closing costs that affords the buyer the ability to pay below market interest rates for the first 2 or 3 years of their mortgage. If you're a seller, you probably want to know, well, how much is this going to cost me? And if you're a buyer, you probably want to know, how much of a lower interest rate can I get during this time period? As with most things in real estate, the honest answer is, it depends. Here are things to consider if you are a buyer who is considering a rate buydown. First, make sure you're working with a mortgage lender who offers a rate buydown product and have them explain it to you completely. This is not the same as buying points that permanently reduce your interest rate. Second, the seller contribution is a percentage of your overall purchase price, so you need to know your desired purchase amount. Third, what's the seller's position? Has their home been listed recently or has it been sitting on the market for a while? If it's a new listing, then the seller may not be willing to make a concession like this yet. Or if the seller already has multiple offers, they're probably not going to consider a concession. If it's been on the market for a while, they may be open to it. Here are the things to consider if you're a seller who's considering offering a concession for a rate buydown. Number 1, what are the market conditions in your neighborhood? Are homes sitting on the market? Did the owners who recently sold their home offer a rate buydown, or was it negotiated during the transaction? Your listing agent should be able to obtain this information with a quick phone call. Second, understand that a concession for a rate buydown is actually more cost-effective than doing a price reduction. Here's how it breaks down. Amanda and Christian are looking to buy a home with a loan amount of $500,000. Their lender is currently quoting them a rate of 6.5% on a 30-year fixed-rate mortgage. That would bring their monthly payment to $3,160.34 per month. Amanda and Christian have found a home that they like, and the seller is offering a 2-1 buydown. What does their mortgage and monthly payment look like now? In a 2-1 buydown, the seller's concession pays to buy down the interest rate by 2 points in the first year of the mortgage and 1 point in the second year. So for the first 12 months of year 1, Amanda and Christian have an interest rate of 4.5%, which brings their monthly payment to $2,533.43, which is a savings of $626.91 per month. For months 13 through 24, Amanda and Christian have an interest rate of 5.5%, which brings their monthly payment to $2,838.96, which is a monthly savings of $321.39. After their 24th payment, Amanda and Christian's rate and payment adjust back to the rate that they were originally given by their lender, 6.5% and $3,160.34 per month. So here's the important element for buyers to note about this rate buydown program. The money that the seller gave you to afford the buydown is held in an escrow account by your lender. The money that the buyer is saving on their monthly payment is actually deducted from the money in the escrow account. So in essence, what the seller has actually done is subsidize the buyer's payment for the first 24 months of their mortgage. But let's say that there's some world event that causes interest rates to drop drastically during the first 24 months of the mortgage. Amanda and Christian could use the funds that are left in the escrow account to permanently refinance into a lower interest rate. Okay, so what did this actually cost the seller? In this example, it cost the seller $11,379.60. How much of a price reduction would the seller have had to have made in order to achieve the same savings for the buyer? Somewhere close to $100,000. So the question this seller had to ask themselves was whether or not they were willing to spend $11,379.60 to make $100,000. Rate buydowns have become very popular during this time of higher interest rates that we're currently experiencing. It may not be needed in every situation, but it's good to know that you have the option if you're a seller or a buyer in today's housing market. Now that you know how rate buydowns can help buyers and sellers, you may also be interested in my next video where I outline the pros and cons of pre-listing home inspections. Are you thinking of listing your home but holding back because you're concerned about what could pop up during the buyer's home inspection and the expense of unexpected repairs? Or do you think that sellers are required to do an inspection prior to listing the home? In some states, it is a required part of a seller's disclosure package, but not in Texas, at least not in most cases. In my next video, I'll break down what's required of Texas sellers and the risks and potential benefits of doing an inspection before you list your home for sale. Thanks for tuning in. If you want to see more content like this, give me a thumbs up or a heart. Or if you want to talk about your specific situation, give me a call or shoot me an email. Until next time, be well.